I'm a large holder of precious metals, and I've been telling people for the last 40 years that they cannot trust central bankers and the government and so forth, and that they must have their own gold reserves. I still maintain this view, but I'd like to make an observation here. If you look at the gold bull market of the last few years, we had a huge move into 2000, and I think it was 11. And after 2011, we went down to 2015. In 2015, gold touched for the last time around $1,000 an ounce. Now we are 3,000 over. My view is that gold is reflecting the loss of purchasing power of money. And if someone asks me, well, is it expensive or cheap? Well, if I compare the cost of living in 1970 and today, gold has been a very good protector of wealth. I mean, you owned an ounce at $35 an ounce in 1970, and now it's worth over $3,000. So it's okay. And I would recommend every individual anywhere in the world to gradually, every month, a little bit accumulate gold, and with the intention to have approximately, I don't know, between 20 and 40% of their money in gold. I have around maybe 25%. But I was just thinking today when I was taking a bath in the evening, whether I shouldn't put everything in gold and silver.
The whole thing.
Because I really think the Western government will all print money, and the purchasing power of money will go down. Now, I admit that to own stock shares is a way to protect your wealth, because the share market is a better protector of your purchasing power than the bond market and cash. Cash and bonds would be the worst instruments. Except if I look at the world, I notice that US shares are expensive, and that some emerging market, Latin America, say Brazil and Colombia and so forth, and Asia, Hong Kong, China, Indonesia, Thailand, are relatively cheap. Also, European markets compared to the US are relatively low. So you and I, if we decided to put all our wealth in stock, we would have to buy stocks that are reasonably priced, and not buy like the Nasdaq in year 2000 in March, which then went down by 83%. Whereas with gold, I think it may go down if liquidity really becomes tight. But as I said, I doubt that the US can really tighten monetary conditions. I'm not sure that it will be used by the system, by central bankers and by governments, but it may be used by individuals. You understand? You and me, we have money, and maybe we have a tendency to speculate, but part of us is also to have money as a store of value, that it doesn't depreciate consistently, that its purchasing power is maintained. That is, say, if you have savings, you want to maintain the purchasing power of your saving, disregarding making money here and making money there. But to maintain the purchasing power, individuals are gradually shifting funds from cash that yields, say, in American dollars, still 4% or so on 10-year bonds. They're shifting it into gold and silver and platinum. At the present time, I think that platinum looks inexpensive relative to gold and silver, because it hasn't moved much in the last few years. And there are times when platinum actually sells at the premium to gold. So today, platinum is around $1,300 and gold is over $3,000. So I think platinum could go up 3 times. Actually, if I were Putin, the South African government, I would squeeze the platinum market. It wouldn't take a lot of money because it's a small market. The US government, with its gigantic debt, they can do a few things. In theory, they could increase taxes to pay, say, the interest on the debt. But no politician would get elected if he went to the public and said, look, you all have to tighten your belts and I'm going to increase taxation. That is not going to fly. Trump has increased taxation. A tariff is a tax on the consumer in America. But he's a great promoter. He tells the people, oh, we have to protect our interest in America, the economic interest. That's why we're levying the tariffs. You understand? He doesn't go to the public and says it's a tax. No, but it is a tax. And that is a possibility. The other possibility is to go to all the people in America and say, look, we have this debt problem. We have to solve it, and we can solve it. The problem is in a democracy. People like that the government spends money on subsidies. Corporate sector loves subsidies and government contracts. Then they will never oppose the government because they get money from the government. And the cutting of social security and retirement benefits would be unacceptable in a democracy. I mean, you think the veterans would take a 30% pay cut on their pension incomes? No. The third possibility, and every government has done it throughout history, the recorded history of over 5,000 years, and that is to print money. The Romans did it, Spanish did it, the British did it, and the Americans are going to do it. And especially Trump, he has no respect for people that lend him the money. I want to tell you what I make of it. Already in the 80s, I thought that they were growing exponentially and that it would lead to a collapse. And now, 40 years later, we're still happily expanding the credit, the government debt. And that can be done for a very long time because you can print money. The central bank can simply accumulate these bonds, or they can make money available to insurance companies and so forth, and the banks, that they can accumulate these treasury securities, or they can make it available to foreigners. So the foreigners, through their current account surpluses, accumulate dollar reserves, and then they buy stocks and bonds in the US or real estate. So it can go on for a very long time. I mean, you go to Istanbul, or 5 years ago to Argentina, inflation was around 100%. In my view, most people in America and in the Western world have been in recession for a long time. Their standards of living are going down, not up. And the problem is that their salaries are going up less than the cost of living. The BLS has shown that they make mistakes in the calculation of everything. You know, that they have no, it's wrong to say they have no clue, but the way they calculate things are not relevant. You see, in America, I have to point this out. In America, the word inflation refers to a department store or to a grocery shop or to a supermarket where prices go up, and then the housewife complains prices are going up, and then they say it's inflation. But there's another inflation, and that is the inflation of assets. When say property prices go up, stock prices go up, bond prices go up, collectibles go up, cryptocurrencies go up. Just think of it. 5 years ago, maybe the crypto market is $200 billion, and now it's more than $4 trillion. That is called liquidity. Liquidity, $4 trillion are floating around somewhere. It would be interesting when cryptos crash if the Fed will intervene and buy them up. And the other thing is they create, of course, a class of people that are immensely rich, immensely. I mean, you have today a concentration of wealth such as we had maybe prior to the crash in 29. A huge amount of money in the hands of very few people because money printing doesn't flow evenly into the world, but it benefits this corner or that corner of the world, and these people and not these people. So we have, since money printing began from the U.S. government, I mean, the Fed is a branch of the government. We have a huge expansion in wealth inequality. I'm not complaining about, I couldn't care less whether Bezos has $1 trillion or $500 billion or $5 trillion. You understand? That is not a concern to me. But I'm just saying the system as it is nowadays is actually sucking money from the population, from the broad big group of people, say from 80% of the people, into the hands of, say, 0.1% of the people. And that then creates not a very healthy society. Yeah, I mean, we could have civil problems. I mean, a lot of domestic problems in terms of political trend, where poor people, they lean more to the left, socialism. Rich people may lean more into the direction of Elon Musk or AfD in Germany, and so forth. So that may create an unhealthy environment.